I'm Julia Cordova, and welcome to the Place Your Trades Network. We are the network that focuses on trading daily options using the CME Group event contracts to trade E-mini S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude oil, natural gas, and copper. Today, I have an exciting show for you. I have Kim. She's at mommavestor on Twitter, and we're going to talk about different ways to hedge your portfolio. I think this is particularly important because of the recent market action. Whoop. So anyway, today's broadcast is brought to you by Tradeovate, which has built a custom app dedicated to trading those CME Group contracts, and that's what we're all using at Place Your Trades. Okay, so I'm going to start off by giving you sort of a 3-minute market overview. I'm going to tell you what I'm doing. I did do some stuff in the event contracts today, and then I'll bring on Kim. Okay, so here's my Tradeovate screen here. I'm looking at an hourly chart of ES. You can see that last hour, the 10 a.m. hour, we bounced right just from right below. Well, it's about 4304 or so. I actually had a measured move there myself. So for me, we're bouncing down from what was resistance. Okay, now as far as what I'm doing on the event contracts, I was lucky. I bought a whole bunch, I bought a bunch of gold when gold yeses for 1970 when they were $4. They're a bit more now. I don't know exactly. I'm not sure how to use this screen, to be honest. I'm using like the phone app for the most part. But anyway, they're doing really well. I already actually took profit on some of them. So now I'm just writing out the rest. I also had some natty calls that I bought for about $3, and they're doing well as well. And then I bought some ES puts. I did it a little bit early. I bought it overnight because I wasn't sure whether we would get above last week's high this morning. I was feeling a little bearish this morning, but then I sort of counteracted that with some RTY calls. So we'll see whether or not those go in the money or not. So, hope I don't lose on both of them, but that's what I'm doing today. All right. So let me go ahead and bring in Kim here. Hi, Kim.
Thank you so much for having me.
Oh my gosh, no, I'm so excited to talk with you. I heard you on the Twitter spaces we were on together, and I was like, this lady is freaking brilliant. And I need to ask you some questions. I've got questions.
Okay, I'm ready.
Okay, so first of all, just because we haven't talked before, can you tell me a little bit about your background, how you got into trading, how you learned trading?
Well, I've always loved the markets ever since I was a young girl. When you used to have a newspaper and you would look at the ticker symbols.
Yes.
The old-fashioned way.
I'm so old. I remember that. I would look through every day and I'd be like, oh yeah, I'd pick like the coolest sounding symbol. I didn't know.
Yeah. Gosh, I don't even remember at that time what the symbols were that I was looking at. I think the Dow was the thing you were watching at the time. So like I've always had a fascination with the market, but it really, especially I'm on the West Coast, there wasn't really a pathway for women, so to speak, especially out where I am. And also, I just had kids young, so my life went a different direction. And when I really, but I was always investing, right? So I would do, read Money Magazine. I'd have my $100 that I'd be putting, or my $200 in some mutual fund. I remember buying gold in 2000, and everyone was like, don't do that trade. Or my broker at the time, was don't do that trade. And it ended up being like I was buying it at $200 back then. And I don't know, I was like reading Money Magazine all the time and learning about different strategies. Anyway, it was probably about 2018 where my husband was a floor futures trader. He knows a bunch of the people that you know. He was traded for Bear Stearns for the S&P. He was their managing director. But, when floor traders have a different mentality, right? And so I started saying, hey, why don't you kind of teach me and let me see what I can do? And so long and short of it, I was working with
Wait a second. Are you still married?
Yes.
Okay. I just had to ask. Sometimes when my significant others tries to teach me things, I'm like, oh no, that's not going to happen.
We see it very differently. I'm more long-term swing trading. He, being on the stock market floor, he's seen a lot of people lose a lot of money, right? And so, he'd always be hedging and, having these grand positions on. Anyway, long and short of it, we were had a stockbroker, and the market started going down, I think in around 2018. And I'm like, how do I hedge this? Like, there's got to be a way. And our stockbroker, who, was pretty big over at Morgan Stanley at the time, he just didn't use hedges. And he's like, just always stay long, always stay long. And obviously over time, stats show that if you stay long and you don't keep trying to time the market, that is a good strategy. But I also wanted to be able to sleep at night, right? And so I just started researching my own on different, stock options, different strategies to use. And anyway, that was my foray into it. And then our stockbroker said, Kimberly, you're doing such a great job. Why don't you just manage this account yourself? So I was managing a portion of it, and he was managing a portion of it with my husband. And then it's this one account that we have. And then finally they were like, why don't you just manage it? And I was really nervous. I'm like, I don't know if I can do this. But anyway, I just started researching it, and essentially there I went from there.
Okay. So I love hearing that backstory because, okay. So right before COVID, I mean, I am, for the most part, I am a technical trader. I just ignore most things. I try to be aware of what's going on around me just so that I know the timing of things. Of course, if there's going to be a day where the Fed has something going on, I know,
right.
Those sorts of things. But I will tell you, before COVID, when I was, on Twitter and I'm looking at all of these apartment buildings being welded shut and whatnot. And then I'm just, hearing that we only have 5 people here and it's absolutely fine. And I'm thinking, but nobody knows until anyway, I was like, oh, okay, no, I'm going to short this. And
right,
I was short for a good month, maybe a little longer before anything happened. And it was like, we were just grinding up. And I am somebody who likes to time the market, but I just kept adding to my shorts. I was like, okay, come on. And, there's like, and eventually everything was okay. Right. Cause it went down and I was like, yeah, okay.
Yeah.
And yay. But, I feel like there's a lot of reasons to be concerned right now, even though price is going up. And I've been bullish for the whole year. I've been buying dips. And I will again, but I just feel like everybody's bombarding us with all of this bad news. It could something could happen, something could not happen, but it does feel like there's a straw that could break the camel's back.
Yeah.
But you don't know. And
right. That's the hard part.
Exactly. So at this point, I mean, I don't want to go through that experience I had before of y'all, I am a degenerate one because I was in TVIX, I was in UVIXI, I was in all of the things that are known to make you broke in my investment account before COVID. So I was down very significantly, and I don't want to go through that again. Yeah. I really don't. I mean, even though it worked out in the end, I don't have confidence in myself that I could do it twice,
Yeah.
So I guess the question is, I guess we could look at it from different viewpoints, right? We can look at it the perspective of traders who might be a little more open to risk and might be a little more, willing to try and time the market. And then let's look at it from the perspective of just normal people who are just, they have their 401k and it's always, putting in money, and they might want to say, hey, broker guy, like you did back in the day, I would like to have something going on. I mean, how, I guess I'd like to know from those two perspectives how someone might hedge a portfolio that isn't a degenerate like myself?
Well, that's a great question. I will say COVID was, I did the best that I've ever done because, like you, I started getting short.
Yeah.
And I started getting short through puts, which I would not do today. It's kind of the same thing. Like the VIX was very low at that time. The market kept going up, and buying the puts. I mean, the minute the market started, I had them on the Dow, I had them on the IWM, I had them on the HYG, the LQD. I didn't even know half of what I was putting on. That's not a smart way to trade. I'm much wiser now, but it worked out. It worked out. In fact, I was up during COVID 6% on my portfolio.
Oh, I have to tell you, I was up a lot more, but it's because I was down a ton before because of all my, I was lumping lump summing. I was lump summing into UVIX and UVIXY. I was like, oh yeah, you want to go down another 5%? You want to go down another 10? Come here. But then when it was down 30, I was like, well, hello, this is not.
Well, and it was hard. The thing is for me, so I'm always long stocks. So the fact that I was up 6%, I was like, that was awesome. Such a huge win because I didn't sell out of my stock positions. So I was totally just hedging, right? Like I didn't go in all cash. I didn't even have a ton of cash on the side at that time. So, but you bring up a good question because I have I have a few different accounts, but there's one account, like you said, 401k, right? That is my non-touch account. That is all indexed, right? So I have it in, Q, SPY, they're not specifically that, but they track that. However, this is a time for me. I was just looking at it the other day and I'm like, I can rebalance it. So they're not single stocks. They're all indexed, but I am actually going to start rebalancing it, right? Because throughout this year, I've been making, money on the Q and I have a little bit in small caps. So of course that's done nothing, but probably what I'm going to do on that account is pull some cash to the side because it doesn't really have much cash in it. And then set it in the bonds where you're getting 5%. Now, I'm not going to fully sell out of it. It's kind of my do not touch account. I don't trade it, but I rebalance it, if that makes sense.
Well, okay. If you have a do not touch account, why would you have any cash?
Like I would right now, I think because the market I say do not touch, but that doesn't mean I don't rebalance it.
Okay.
So I usually, what I mean by do not touch is I am not trading that account. What I mean is trading it, right? So, but I do rebalance it. I would say every 6 months, once a year. It's not something I look at every day. I'm constantly investing in it, monthly.
Yeah.
So
I have the same, by the way, I do the same thing. I don't, for the most part, I don't really look at my 401k because I know myself and I would overtrade it.
Right. Me too.
Let me just be 100%. I would absolutely overtrade that account if I looked at it all the time. And, but I do buy some individual. I have somebody I know that's like the best stock picker in the world. So I do when
I need that person.
Oh my gosh. I'm afraid he's on a hot streak. So now it's like, oh, now I don't know what to do. But he was ahead of like the AI squeeze. Anyway, when he tells me something, I'm like, all right, then, you know what I mean? And and then I just sell it when it gets up. But I do the same thing because I don't feel like looking at it is a very good idea. But I know people are nervous about what's going on right now, just, in general.
Yeah. Well, and so then in this other account that I do trade much more actively, right? There's a few different strategies that I use. Now, right now, it's cutting into my profits going up. I'm still making money, right? But at the same time, this market's been straight up based on that AI, everything. If you say AI, your stock's going up, right? So, I didn't anticipate that. Obviously, I don't think a lot of us did.
Right.
But like you said, I think there's a lot of, I don't know what that thing is that's going to break the market down. I mean, some people say it's the treasuries right now that they're going to issue. I mean, the student loan debt, if the Fed does pause
Yeah.
not pause, but actually cut rates. So I look at this more, instead of COVID, where we had that one event, it was much easier, even though you had to wait a month and I waited a month or two. Still, once it came back really quickly.
Yeah.
There's a few different strategies that I use. So one is I'm very heavy tech, but I
Okay.
don't want to sell out of all of my tech stocks. So I'm trimming a little bit as they've gone up, but I can't time the market, and so I always like to stay long. So one thing that I start doing is I use the micro futures. So I'll use the MNQ, and I
Hmm.
use the MNQ because it's much easier to scale in.
I
The
love,
NQ,
you know what? I
I've
mean,
gotten killed on the NQ before, both
of course,
ways.
you know what? I have no shame in my game. I am a huge fan of micros because you can like, you don't necessarily have to time anything so much as, do, 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 do. Like, if I
Right.
have a particular line and it's an hourly and it's not weekly or, whatever, I will absolutely set the do, 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 do right above or below that line, depending on what I'm trying to do. And then I have a better shot of actually catching a move. I
The
no
down.
shame, no shame in my game. And also, you can get poor really freaking fast if you
If you're
don't.
playing the big NQ.
Yeah, I mean NQ, silver, natty,
Yeah.
those big futures are like, oh no. Like, it's scary for me. I'm sure there's people with a lot more money. I just don't like to lose that. I just don't.
I want to sleep. I want to sleep at night. And if I'm
Yeah,
not day trading and I'm trying to swing trade it. So like for me, it's not that I don't day trade some of these futures, but lately I've been doing more swing trading, right? And looking at, protecting my portfolio as we're moving up. So while it's cutting into my profits as we're moving up, right? Because I have a few short MNQ hedges on, and then I add them as we go up. Once that thing swooshes, if it does, you're making money on the other side,
right,
right?
right.
And so, like, I'm underperforming honestly this year, but at the same time, once the market starts to turn, which it always does, we know this, right?
When we least expect it.
When we least expect it. And if you're just slowly getting in, and the thing I love about the micros is there's no time decay, right? So I'm not stressed out about, oh my gosh, this is going to expire
Yeah,
in a month, and now I actually did lose the money, and now I got
right.
to allocate more capital. I mean,
Well,
they do cash settle, so you have to have the cash in your account
right, right.
every
But
night.
yeah, but you're exactly right. So, some people I know trade options, and I'm more of I'm a levels person, but so I can say, hey, if it holds this, I think it'll do this, or if it doesn't hold this,
Right,
I think it'll do this.
right.
And I'm okay at that. But what I don't know is people are like, well, what are the odds of that happening within the next week? I'm like,
I know. It's like,
if I knew that, I would be on a beach somewhere not talking to you right now.
right.
I mean, that's so options are so hard. And a lot of people go broke trading, the weekly,
ODTs.
yeah,
Yeah.
yeah.
If I buy the puts, when I was buying the puts in COVID, I was buying them, and they were cheap back then, right? I was buying them 3 months out near the money. So I wasn't going way out of the money. I was near the money. And then every time they would decay to about, like, if I was losing 33%, I'd roll them.
Right.
So another strategy though I use is hedge wrappers, for example. And I think, what's the other term for those? You might know the official term. I call them hedge wrappers
I
because
don't know.
they're like a present. So like when Target got all that bad news, and I'm like, I own Target, and I'm like, this thing is going to start going down. And I love Target because I like to shop there. It's a dividend stock. So dividend is a way to hedge too. You're making money if a stock's going down and it's sitting idle and you want to be long it long term. So I did a short call and a long put to wrap my stock.
Okay.
And so what ended up happening is Target started dumping, and I just, I had a feeling, I'm watching it. I'm like, people are going to start They're mad at Target. People are going to start dumping it. And I got out a little bit early. It doesn't really matter because I still, protected myself on the way down, right? But I did an at the money short call and then a pretty near the money short put. And I didn't pay for it because the short call, right? The short call, I got a premium in, and the long put, I made sure to go to a strike that it wouldn't cost me money.
Okay. So what I'm hearing is one strategy is that if you have, a large account that is mostly long only, or that is, then one strategy might be to now my 401k people don't allow me to trade futures inside of it. That's probably
I can't do that in my 401k.
That's probably a good thing because I know I would, but okay, so but if you have an investment account that is something that mostly you don't touch and that you're looking at potentially, so how would I figure out the ratio of, how would
for your if it's a single stock, it's 100 shares, right, is a short call. So you have to have 100 shares.
Okay.
So basically, let's say Target was at 150 at the time, and I sold, instead of buying a call, I sold a call. That means that whatever premium I took in, I think I got $400 premium for that. That means if Target were to keep going up from 150, I wouldn't start losing money on that trade until it went to 154. But I own the stock. So the worst that's going to happen is I'm going to turn that stock over if Target ran. But I really thought Target was going down. So I sold an at the money call. I have a few hundred shares of it. So let's just do one lot, a sold call. I have 100 shares. I take in $400 premium, and I took that same $400 and bought a put.
Okay.
Right? So the put didn't cost me anything.
Gotcha.
And I bought the put, I think, at 145. And I went about a month out, 30 days out. And so what ended up happening, Target started swooshing down. So that short call money started coming my way, and then the long put was making money. So I was making money both ways, on the short call and on the long put.
Okay. And then the stock, meanwhile, is going down. So you're losing money there, but overall.
Right. But I wasn't losing money because I had it hedged. I had it wrapped. There's a formal term for it. I can't remember what the actual option term is, but I call it a hedge wrapper. So I will do that on my stocks. If I think a pullback's coming, I'll either sell covered calls on them. So like I said, the worst, I'm going to take in a premium. Instead of buying it, I'm selling it. So I'm taking that money in. And my only risk is I turn over my 100 shares. Now, if I don't want to lose the stock, or if I have to pay capital gains, if I have a big gain on it, that's, you have to weigh, is it worth it, right? If I turn that stock over. But for me, in this one account where I sell a lot of the covered calls, it's an IRA. It's not my 401k, that's separate. It's an IRA, so you're not paying anything. Right? So but basically, selling covered calls is a way to somewhat protect your downside. And then if you buy a put with that money, then you're basically protecting your whole downside, depending on where your strikes are at.
Okay, but you're also limiting your upside just in case.
You're limiting upside, absolutely.
But your thesis is that the stock is going down, so.
Correct. Now, I wasn't expecting, let's just take Microsoft, for example. Microsoft was trading in that 240, 270 range for this last year. I owned quite a bit of Microsoft, and as it started popping up, I sold the 280 call, and I think I got $500 for it. So after 285, which is a bummer, after 285, I stopped making money on it. and it just went too far. So I turned my stock over. So I still own Microsoft. I did not sell calls on all of it, but I did turn over a couple hundred shares. So that's a bummer, right? But again, can't time it. Who would have thought Microsoft was going to go back to its all-time highs with this AI? I mean, had we not had that AI push, that trade range probably would have held, I'm guessing.
I go back and forth in my mind of thinking that we're only at the beginning of AI, because I know we are, but also that a bunch of people, like we were only at the beginning of .com
right
for a while.
Yeah.
And now look, I mean, I would argue the entire economy is based on .com for the, you know what I mean?
Exactly. Yeah.
Now.
Yeah.
So, but there was a little bit of a something before the big something, you know?
Yeah, exactly. Like it's just, this is, I think, one of the hedging strategies. Know your risk. Cash is a hedge. And FOMO, I feel it right now, right? But if I don't FOMO, to me, that's a hedge, right? Stopping myself. You also mentioned the VIX. The way I like to play VIX is the VIX futures.
Oh yeah, and they have that. They have micro VIX futures.
They have micro VIX. So I'm long a micro. And then the only thing about those is they expire every month. So you gotta, you know, I wish they were longer dated, but it is another way to get long VIX, right? So
you know what? I have never traded those little micro.
You can make money fast and you can lose money fast. It's the same, right? But I like it because there's not the decay on it, like those levered, or there's not the same decay. There's less slippage than the levered funds.
I'm sure.
I've never done well using the UVIXI. I know people that use that as a hedge all the time. I'm not good with it. So I like to use the VIX futures, and then I just always keep a couple on, even if I'm losing money. I just think of it as the cost of doing business, right?
Yeah.
And because, you know, the VIX can spike, you know how fast that thing can go up and you're not even going to catch it.
Right. You can't, you could, but I mean, yeah,
it's hard. It's hard.
I have traded UVIXI before, but it's the odds are very much against you because of the way that it works, of course. But and like I said, I did it. My entire pretty much investment account had been into both UVIXI, sorry, not UVIXI, UVIXI and TVIX. Yeah. Oh my God. I was either going to go poor or go rich. Like it was one of the two, but it was stretching my imagination how the market could continue going up despite all that. And I just know there's a million reasons, and it can, of course, it could have continued going up. I didn't know, but yeah. So this is interesting. So we got hedge wrappers. We've got potentially using the micros as a hedge.
Mm-hmm. Covered calls, and the VIX, right? And then pushing cash to the side. I mean, now I am cash heavy right now, and it's frustrating. This is where the FOMO comes in, right? Like it's the same as COVID. Once the market starts going, it's a tough one, right?
Yeah.
So I'm not happy with myself that I have so much cash in this account on the side, but you are earning, you know, I have some of it in Bill, some of it in SGov, some of it in a money market, right? With really liquid things so that I can get it out that don't move. So at least I'm getting interest on that money. Yeah. And honestly, if the market starts swooshing, I will sell puts, for example, Microsoft. If Microsoft starts swooshing and turning the other way, I will sell puts to get my stock back. That's how I will scale back into Microsoft. But I'm waiting until vol goes way up and we get some type of, you know, this isn't the time to be selling the puts when at least for me, when the vol's low and things are going to their all-time highs. I think Microsoft is close to an all-time high. Apple's might have just hit an all-time high as I'm looking. There's another strategy that I played in 2022 that worked, where it's buying ES. So you buy ES options 60 days out at the 0.02 delta.
Okay.
So way out of the money. It's called a black swan, essentially. And when we had that big turn in 2022, I had a few of those on. And they were a little bit underwater at the time. And I had just started putting them on because a friend of mine had told me about this. And I'm like, I'm just going to try it. Right. And so you're buying way out of the money. They're not, if the vol is down, they're usually not that expensive, at least for me, for the percentage of my account. Right. And when that whole market started to turn, those started really expanding. It was shocking to me because I had them at 3,900. I never thought the market was going to 3,900 at that time. And that's where I had those. So I took them off before it hit that. I was like, obviously kicking myself, but they were still making great money because they were the ES. So They started expanding so fast, so quickly. And I don't know, you use futures options?
I do occasionally, yes.
Yeah. That's what I was using it for.
Yeah, that's interesting.
Yeah, and it's called a black swan, and then you buy them 60 days out, like I said, at 0.02 delta. So you're really thinking of it as this is just money that I'm using as a cost of doing business, essentially, right?
It's money you can afford. Okay. I would think of this money as I'm going to Vegas. I'm going to bring $10,000. If I lose all of the $10,000, I had a great time.
Correct.
And that was the cost of my vacation. But if I win money,
you're winning big.
then you're right. So I guess it's money that you say, you know what, my portfolio is mostly long, and I'm going to make more than this, whatever the amount is. And, then I lost it because I listened to this guru who told me that the market was going to crash, and it didn't. Well,
and you can roll them. So the strategy is you buy them 60 days out, but then you roll them when they get to 30 days out. So let's say if the market keeps going up, those would be underwater, right? But then when you roll them to the 0.02 delta again. If the market's gone up, you move them up. You're going to pay a little bit more, right? But then you keep doing that strategy. So I've only done it I only did it a couple times in that 2022. It worked great, but I've been considering doing that again as we're getting this big push up. And it took about a couple months for those to really start moving. But I think it was that February 2022, was it? February, March, that we had it really started moving down the market.
Yeah.
And so that's the ES, not the micro.
Right.
You could do it on the micro, but I don't know. It's not as liquid. They're not as liquid, but those ES options I found to be pretty liquid. And I don't know. I don't like to buy a lot of the options, but the good news is there's not time decay the same way that there is on the regular options, right?
Right.
Yeah.
That is the problem for a lot of people, because timing is everything, as you know, like for the options.
So the Greeks don't, to the best how I understand it, the Greeks don't really apply to futures options in the same way. Yeah. That, like, you don't have the same theta decay.
Yeah, right.
For example, yeah.
Right. Oh, this is so interesting. I love this. All right.
It's just, I think the biggest thing is, like, I start getting all these strategies, right? And then I get too many strategies going on. And I think everyone needs to consider, like, this, Julia, like, what kind of a trader am I? What kind of an account am I trying to manage?
Right.
So I see myself as a long-term investor and a swing trader. So I try to do things to bolster kind of my alpha as the market's going up, right? And then at the same time, try to protect it if I start thinking we're getting frothy. But you never know. The market could keep going up. I mean,
Froth sometimes begets froth. You know, I know that because I really thought it was, my biggest short to date was right before COVID. Like I really thought it was frothy. I thought it was frothy. I thought it was frothy way before anybody ever talked about COVID.
It was on steroids. Remember that? It was
gross. I don't like it. I didn't like it. And I'm a natural. People would never believe it because I've been buying so much this year, but like I'm naturally bearish. And it's hard for me to just be bullish and just believe that everything will turn out okay. I don't believe that, but I mean, but that's why I really started focusing on price action and not focusing on what everybody's telling me.
Right. It's hard to cut the noise out, you know?
It really is. It truly is, because there's just a million reasons to worry. And there's.
And I live with a bear.
Oh, do you? Is your husband naturally bearish like me?
Yes, because he saw just so I'm more neutral, you know, like I don't like it when the market's going straight up like this, even though, you know, I'm long stocks. It makes me nervous when it's going straight up like this.
Yeah.
But Mark, because he saw so many people lose so much money on the trading floor, you know, he knows a bunch of the floor traders from that time that he's just naturally bearish. And I just have to cut that out sometimes, right? It's
right.
Okay, he's usually right, but he's early.
Yeah. And that's the thing. I mean, yeah. I mean, I was thinking about this weekend. Like if the trend is up and you're bearish, people think you're a genius and you're eccentric, but you're early. If the trend is down and you're bullish, people think you're a freaking moron.
Cool.
That's like hopeful. Like I got so many honeys when I was buying the dip in January. Like people were like, "Oh, that's so cute that you're so stupid." You know, whereas like if I had been bearish and it went against me, they'd be like, "You're brilliant. It just went in the other way." Like
I know, it's like you just have to and that's really what's been amazing about for me finding women traders too, because I think sometimes like I look at the market, I think a little bit differently, maybe, right? Like looking at it more long term. What am I doing for my kids? What am I doing here? And it's been really amazing to connect. That's been the beauty of Twitter, right? Like I always felt isolated. I had one female trader friend who trades her family's trust accounts, but man, she was trading like things I would never trade, right? Like putting on huge trades. So it was great to have her, but it still was a little out of my realm, right? And that's the beauty about Twitter and meeting you and so many other amazing female traders is I just think a different lens, you know. I'm not going to post not that women don't, but I mean, I'm not going to be posting, you know, if I post my gains, I'm usually posting, I made $100 on this option or like something realistic that people can buy into.
I will tell you, when I first started trading, I happened to be successful in my past professional life and I had a lot of money. And I was trading it very actively, and I would have 6-figure days on the regular, but I would have them in both directions. Mm-hmm. So because you have to be able to, if you're risking enough to make it, you're risking enough to lose it. Mm-hmm. And so when I see people post these outrageous gains, all I can think to myself is, I remember when I used to do that. And I also remember having not post them, but when because I don't do that anymore. I'm much more conservative now. But if you can make $100,000, you can lose $100,000.
Yeah.
And people, and I think especially noobs, they just see, oh, look at this person. They made, 20% off their account in one day. And of course, an options account, it's easy to do, but it's also easy to lose all of it in one day also.
And I think that's the thing, like, a lot of the new traders haven't been through a crash, right?
Right.
And I'm not saying we're crashing. I don't like it when people call for a crash. It's like, I mean, I might secretly be thinking it's going to crash, but I don't, I'm not going to like say, hey, we're going to crash, because no one really knows. These things come out of, think about 2000 when the market was going straight up, then it had started to pull back. I don't remember the exact timing, but 9/11 was kind of the thing that threw the market down. Like, it's out of thin air.
Right. Yeah.
But then if you're just leveraged up the hill, I mean, you could be wiped out. I've known people to be wiped out in a day too, when they've used their stock as margin, right?
Right.
Or maybe they work for a company and they've used their stock options as margin. I actually know people who have been wiped out leveraging that when there was a huge downturn.
Yeah.
So I'm pretty careful. I leverage with using, here's the thing, and know what you're trading. Like, an MNQ is 80 shares of Q. So if I'm trying to hedge against all my long tech, I'm thinking of it in those terms, right? I'm getting short basically 80 Qs every time I add one. Am I going to be okay with that? That's what I have to ask myself. And I have to think of it in that term.
I love that.
And ES is 50, or MES is 50 shares. If I take on a whole NQ short, I'm short 800 Qs.
Right.
So I try to think of it in that way, know the risk I'm taking, and know how I'm hedging, how much am I hedging basically in the indexes against my stock.
Got you. Somebody in the comment section was like, wish I married a trader. I could use a balanced opinion. It's true, right? Because you can't. It would
we
be
get
nice.
We get in arguments though over it too, to be honest.
Well, yeah, and I would. It's so funny. Last week, I was on the bubble for feeling bearish or bullish. I was like, this could go either way. And I asked somebody who doesn't know anything, because I thought, you know what? If I present to them the most unbiased case of why I think it's bullish and why I think it's bearish, and they might actually know more than I do, because I have and they were right. And I went with them. I faded myself last week because I was feeling bearish. I'm like, I'm feeling bearish and I'm usually early. And this person who doesn't know anything looked at whatever I presented to them and said it was bullish. I was like, oh, I faded myself and it worked.
That's actually really cool, because I get really biased too. It's so hard.
It's so hard. Yeah. And then, I like asking somebody who doesn't know anything, because they're not biased. As long as you can present to them in a way that doesn't even let them know potentially what you're thinking. It's just like, here are the facts. Now, based on that, what do you think is going to happen? And I find the person that doesn't know anything will outperform if I don't have an opinion. If I'm like 50-50, I think that person's going to outperform me. If I have an opinion, then I don't care what they think. Like, I'm not even going to ask them. You know what I mean? But if I'm on the bubble, I'm on the bubble, that's so interesting. So
the best trades, honestly, that I've some of the best trades I've made is asking my kids what they would buy.
That's the people who don't know anything. That's what I'm saying.
I'm like, agreeing
they don't
with
have
that.
the fear. They don't have the, that's.
I'm like, what stocks do you guys like? Like, what products do you like? I remember my daughter told me, Helly, no, it was those, what are they called? The water bottles that were cold, that there's a name for them.
I'm so
those metal ones. And so I looked up who made those. I think it was Helly Hansen. They owned the company that made those. And was like 95, ended up going up to 150. I bought some of it. I just bought it because my kids, I mean,
Yeah.
my son started telling me to buy Netflix when it was at $4.
Okay. Yeah. See,
I thought that was the stupidest.
I have to tell you, I did very well buying Netflix and Apple, and my before I was really a trader. I just bought Netflix and Apple, and my even I think you know how they call you and they go over your portfolio.
Yeah,
And he was
yeah.
trying to sell us services, and he's like, "Yeah, we don't usually see people as concentrated as you are. Maybe you should." Not do that. And I'm like, no, I like these products. I think, and then I told somebody else to that I thought Netflix is going to go way up. This was right before the cable cutting thing. And they go, oh, it's too expensive. I'm like, that's why it's going to go up, because
that's a good point.
it's already at that point where everybody thinks it's too expensive, and then it's going to go more. Yeah. But
no,
yeah.
that like Nvidia, right? Everybody was calling for that to go down with earnings. And then it was up 30% with earnings.
I'm not going to mess with it. I had some. No. I sold a while ago, so whatever.
Yeah, I did. I did too.
I wouldn't mess with. I personally wouldn't mess with it, but it could be the next. Who knows? I don't know. I wouldn't mess with it on either direction right now. I would wait.
Do you short stocks? Because I do not. I only do with like short calls.
Okay, the last time I shorted a stock was Mobileye, and because I had been long.
I don't even know what that is.
It's basically a self-driving camera call. Like the Intel bought them, but that's the whole story, right? So I had been long for the longest time, and then I sold my stock, and then I was like, it was making a bullish wedge, or it was making a wedge that usually they fall down from, and so I was like, you know what, I didn't really I'm going to short that because I got out of it. I think it's going to go down now. And then it went up like 30% overnight, and I'm very blessed that it only went up 30%, because it could have been a whole lot more. But that's the last time I shorted, and, as opposed to buying the option stuff, which I do
right
now, or puts. Yeah, because I've shorted Tesla. I shorted Tesla several times on its meteoric rise up, and I can't even believe it. I actually made money 3 out of 4 times.
You actually shorted the stock?
No. Well, no. I bought puts.
Oh, bought puts. Okay.
You know what I mean?
I'm like that.
Yeah, no. That's what I'm saying. I learned my lesson.
Yeah.
Because I know I would.
I don't short stocks at all. Maybe unless I'm doing like a short call.
Maybe intraday I would do it, but I haven't done it. There's no reason for me to do it with futures and whatnot.
That's the thing. Like once you have futures, there's just so many different strategies that you can use. You can rotate sectors, right? Yeah. Like during the whole Ukraine thing, I started buying wheat. And what did I buy? I bought the micro wheats.
Yeah.
And I'm just like, you just get that feeling, right? You start seeing that it's going. I'm like, I'm going to buy wheat. There's all this talk before. Yeah. That's what I love about futures.
It is confusing because they have different hours. So I would hitting the button to sell or buy. And I'd be like, why isn't it working? Because it's like everything else is trading. They like close it and open at weird times. I'm like, I always, whenever I wanted to do something, it was closed. I'm like, what in the world?
Yeah. And that's the thing. Like, I wanted to buy copper the other day, and I was talking to Mark, and I'm like, I want to buy copper, but I wasn't used to that contract.
Yeah. And
I didn't see that I could buy a micro one, and I kicked myself, but it could have gone the other way too, because I wasn't used to I wasn't sure the risk I was taking with it.
Yeah. Well, I do want to say I am going to plug the Trade-A-Bait app here, because you can easily, like, I'm not used to trading the futures either. And I don't like to trade something I haven't watched for a long time.
Right. Yeah.
And even if I have a very strong feeling about it, I'm like, yeah, no. So there's lots of times I will actually buy, and there are sort of one day yes no options, but it's a really nice way to get into copper, to get into natty, silver, NQ, the things that might be a little,
are they options on the futures?
Yes, they are essentially. Okay. Yes, because you're looking at futures data, and you're basically saying I believe it will close above this, or I believe it will close below this.
Okay.
And they're based off of the futures price, which is perfect for me because futures are wonderful to chart. And you can, take risks that you normally wouldn't take with futures, like with Nat. Like Natty is so hard to trade. I do it anyway. But I mean, no, for something like copper, when I saw it, actually, I almost bought it last night and I didn't, but I did buy gold because I thought, what are the odds of it turning around?
I'm long gold.
Yeah, that was smart. So I was
Yeah.
also long a few contracts of the micro golds, but I'm an idiot and I had set a sell. I'm like, okay, if it goes up here, it's gonna. And then I saw it going to me. I'm like, where was my sell again? I ended up making money, but I was like, dang it, I should have trailed it when it got there and not just sold all my contracts. But whatever. Anyway.
Yeah, that's what I love about trailing stops, right? Because
but I, on the future, I don't know.
futures are hard.
I just move up my line.
Yeah.
More than trailing. I just move up my stop line more than trailing.
I do that a lot too, where I bracket it.
Yeah. Well, that's what I did for gold. I had it. So I was just about to stop out, to be honest. And so I added, I sent my friend a note. I'm like, all right, I just added because I'm about to stop out. And then it started just going, it was like early this morning.
It was really negative. It was way down
so negative
overnight. I saw it because I have had it on for a couple days. And I'm like, man, I'm getting killed on this.
Right.
First.
Right. No, I just went long pretty much end of day on Friday. And then I, added a little bit on, last night. And then this morning I was like, all right, I'm, going to put
but see, for me, like that's another hedge, right? Like gold going. Yeah. So I actually put gold on as one strategy to hedge my portfolio, right?
I love that.
Making money on the other side, it's like I have a lot of cash, so where can I deploy it that's not going to be chasing?
Yep.
And that is somehow going to be protecting my portfolio, so to speak. It's never a one, except for during that COVID time when I bought all those puts. I'm not looking to hedge one for one. I'm looking just to mitigate my downside.
Same exact thing here. Same thing here.
Yeah.
Oh, Kim, it was so wonderful speaking with you today.
It was so nice talking with you.
Oh, I really appreciate it.
I'm going to have to come to Florida and...
Yeah, let's have cocktails.
I would love that.
And I just in general, I mean, I love you as a trader. The fact that you're a woman trader is like just a bonus for me, but you're just an inspiration to all of us. I'm just in awe.
Well, you are to me.
Oh, I'm just in awe of your talent and all your knowledge, and I appreciate you sharing today. I'm actually going to look into that black swan thing.
Yeah, 60 again. This is just like, it's like you said, it's like going to Vegas. So I call it the cost of doing business. I'm not really worried about losing money on it.
Right.
So 60 days out, 0.02 delta, you roll it every 30 days. I learned that from a friend of mine.
Well, I love it.
Who learned it from a friend of theirs, a woman friend.
That's awesome. I think I'm going to do it. I think I'm going to wait till resistance though.
Yeah.
And then I'm going to do it. All right. Thank you so much, Kim.
Thank you so much for having me. It was such a pleasure and honor.
Everybody follow mommavestor on Twitter. She's a great follow. And I will see you on the interwebs. Okay. Bye.
Thank you. Bye.